Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 8th edition of Market Outlook. Just want to remind everybody, if you like what you read and you like this video, you can get this for free on a weekly basis just by going to www.marketgauge.com and signing up for our free newsletter called Market Outlook. Also, if you just want to listen to the videos, you can follow us on our YouTube channel. So, with a shortened week, let's take a look at some of the developments. Interesting, once again. Pretty choppy market. Some very light volume as expected on holiday trading. So let's take a look at. We're going to take a look at the SPYs, our normal market internals, and we're also going to take a look at the cloud computing ETF and a few of their components, and maybe take a look at silver if we have time. So, first thing, as you can see, the spiders have been now trading above this blue, which is the 50-day moving average. In addition, the 10-day has now crossed above the 50-day, and this is now a confirmed bullish phase. Another important thing to notice is that the slope that was fairly sharply down on the 50-day is flattening out along with this 10-day rising, and you can see we pretty much stopped very close to the low since that huge gap up with the Euro rescue last week. And so with the shortened week, we basically closed down a little bit, not much, maybe 1% or so, or even a little less. But overall, again, a definite upgrade. Now, one of the things I want to point out, this is also a free resource on our website, is if you go to resources, you can see market overview over here. It's called Little Big View, and if you go to that page right here, you see today's markets, which gives you a very nice synopsis. There's multiple pages, but one of the things that is of very high value is the volume analysis page on the market overview section. And as you can see, even though that we've been up very nicely in the last week and basically have recovered from that recent sell-off, we've got over 4 distribution days both in the Dow, the Russell 2000, and the S&P 500. So now this is interesting. So even as we're going up, we're getting distribution days, and a distribution day is where the volume on a down day exceeds the prior day's volume level. And we've had a number of them. So that is a definite thing to take notice and to be of concern, and is definitely a more negative or a bearish indicator. Now, you weigh that against, of course, the overall market phase, and that's been an upgrade. Let's also take a look at some of the market internals. So here's what we have. We have the first. We always look at that McClellan oscillator, which is more of a looking out 1 to 3 weeks, because it averages 19 days and 39 days worth of data, both of advanced declines and up-down volume. And as you can see, we got into overbought regions, and we hooked down with the 2 days that were down days on Thursday and Friday in the S&P. So we're on the cusp of a sell signal right here. Now, on a shorter term basis, the advancing versus declining issues looking back over 10 days. So this is more of a shorter term indicator looking forward for a couple days to a week or so. And interestingly, we've had some decent advanced decline movement, and you can see we're holding nicely. On the other hand, right, as we know, the volume is not confirming, because those distribution days is really pointing out that this data here, right, the advanced decline the up-down volume is waning, and you can see we have certainly not done as well as the advancing versus declining issues. So we're going up on very, very light volume, and therefore our up-down volume readings are still on a sell signal, but it's diverging from the advances and declines on a shorter term basis. Let's take a look at the VIX and what that's telling us. This is market sentiment, of course, and that indicator is clearly in the lower end of its Bollinger Bands, which is okay. It's not through it or at the bottom of it, so no irrational exuberance there. We're clearly trading under the 50-day and the 200-day moving average, so you can say sentiment is definitively positive in the market right now. And it's not at extreme levels, so there you have what I would call is a pretty mixed picture, right? Advanced declines, the volume, diverging from the from each other, sentiment okay, and the overall market phase positive. So pretty mixed picture, but overall probably the evidence points to slightly positive, potentially in the S&P right now, but very marginally so. Another thing, let's take a look at silver, because silver's at a very, very interesting point. So over here you can see daily chart on silver. Looked like we had broken through, had the lowest close that you had in a while, immediately had a vicious rally, and then a vicious sell-off. So you're frustrating both the bulls and the bears, but trading at a very, very important point. Let's take a look at the weekly silver chart. I think I just minimized it because that is at a very interesting point. Okay, so if we take a look at the silver chart, we got a couple things going on. Number one, let's put in a important support line here. And if we take the recent lows, you can see how important it is to also look back and not miss important support on the weekly charts. So taking it from the absolute low, you can see we tested it, but last week or 2 weeks ago, when we did have the lowest close that we had in a while, it still closed above the lowest weekly intraday readings that we had in quite a while. So we're sort of going to redefine our support levels as somewhere right around here. Obviously on a closing basis it's going to be more like here, but we want to watch the recent lows and see if we get through that. Another play that you might want to consider is doing straddles or strangles as the market plays out around this zone, because we don't think it's going to stay stable at this level. Either the market is going to substantially rally off of this point or potentially take a significant drop, and you can see that this whole thing could be either a topping pattern. Now, another way to use trend lines, we're going to use that right now, is to take the bodies of the candles. This works especially effective on a weekly basis, and let's take a look. So we take the body of this candle, take to the body of those two candles, and you can see how it basically also coincides with the body of the candle right over here, and you have a very significant little pattern that you can see. Let me enlarge this or give it a little more weight so you can see it. So you can see we have a nice multiple point trend line, and so if we can bounce off of here and take out this trend line, it could mean a significant leg up. On the other hand, a failure through this critical support line is a leg down, which could be of significant size. We're trading currently at 26.36. Certainly a move down to support at around 20. So you can see almost a 20% move down before you're going to hit some support right down here, maybe even a little bit lower. So this could be, especially if we continue to move back and forth and don't do anything significant, a little bit more time would go by, compress the volatility of the options. Could be a really interesting play there. Now, let's take a look at cloud computing, SKYY. Now, this ETF hasn't been around that long. Looks like a little less than a year, but let's take a look at the daily charts on SKY. So a couple things happen. You can see that this thing has really lagged the overall market. It had been one of the leading groups because it included a lot of really important technology. Now let's take a look at the overall pattern here and see what we have. You can see we're forming a relatively nice channel, upward channel, but right from here to here. So we're trading the bottom end of this channel, but more importantly, this in the last couple days we have broken down. The 50-day has broken down beneath the 200. We had this attempt to break out to a potentially bullish phase, or at least what we would call an accumulation here, where you're trading above the 200, but the 50-day had traded beneath. Now you're actually at a unconfirmed bearish phase. So clearly this computing group, SKYY, it's got 42 or so different stocks in there, from Apple to Google to a lot of different areas involving what we would call the latest tech craze, and clearly breaking down. This is why you see NASDAQ 100, which had been leading up by a wide margin, basically just being pacing along with the other key indices. So we've got this nice trading channel. Looks like obviously if we break down through this channel, that this is definitely going to put some pressure on the market, and which is interesting because it's going against some of the other groups, including biotech and some of the leading home builders. So you've got a mixed bag here. What I expect is more choppiness. Don't really like the fact that tech is failing, so we need to see where the leadership is going to come from, and that is unclear if we're going to get some new leadership from other groups. So meanwhile, we got that tech and some of the home builders leading. Now let's take a look at IYR, and you can see this is quite the different picture from what we just looked at, right? IYR is the real estate ETF, doing quite well. In fact, made new highs this week, and even on Friday, when the market was down substantially, you can see that the home builders actually did okay and closed positive for the day, and led by Lennar Homes, which I had pointed out over the last couple sessions, actually made a new closing high. And you can see, going counter to the market, you've had a number of accumulation days, and just before the acceleration to the upside. Now, yes, volume has been light, and we are a bit overbought, so I wouldn't necessarily go rushing in and buy this, but it would be interesting to take a look at these stocks on somewhat of a correction. So there you have it, mixed bag in the market internals. Trend is overall positive, and different readings from technology to real estate. So there's your overall view of the markets. Hope you had a good weekend and enjoyed your July 4th, and look forward to seeing you next week. And remember, You can always follow us by signing up for this newsletter for free at www.marketgauge.com or find us on our YouTube channel, marketgauge.com. Thanks, and bye for now.